1 year ago or 1.5 years ago, we talked about financing and the availability of debt. And this is, in my eyes, completely solved in Germany. So we see German banks getting more and more aggressive. We see additional debt provider. We see a lot of mass funds bridging the gap between the equity and debt. So the availability of debt isn't a problem anymore. It's vice versa. We see especially for low leverage deals, we see a lot of competition in Germany. So this has changed dramatically in my eyes.
And so availability of debt no longer a problem. Does that also mean that the same is true for refinancing? That's also no longer an issue, because obviously that's something that had been always a big part of these discussions over the last kind of 2 or 3 years. How are people managing to refinance? Is it straightforward? Can they get everything they need from the banks, or are they looking at alternative sources?
Yes, two things. On the one hand, the banks are willing to lend existing properties also for refinancing, but on the other hand, we see some alternatives coming up in terms of refinancing. So what we have seen is the GAGFA and Deutsche Annington refinancing. So we see securitizations. I think Bank of America was the originator of that. And in addition to that, what is really interesting, we have sold a resi portfolio end of last year to a listed company, and they have refinanced that diversified resi portfolio. It's a special German name. It's called Schuldscheindarlehen. It's a kind of a bond where German insurance companies and pension funds could invest, and the coupon was a 4% for a 10-year fixed loan. And the interesting thing is that these clients do not want to have any amortization. And when we all know the resi cash flows are not so strong, if you have a 4% coupon in place for the next 10 years without paying any amortization, that's very healthy for your cash flows. And due to the fact that this is a listed company, if you purchase something between 10 and 12 times, it's an 8 to 10% gross yield. If you pay 4% without any amortization, it's NOI accretive, and this is what these guys are looking for at the moment.
And is that a new kind of type of, is that a type of financing that's been available but nobody's been accessing it before? I mean, I hadn't heard of it before, that's all, and I would remember that. Well, I've already forgotten what that word was.
I mean, we saw that product even in the past, but I think it's we see that product at the moment due to the lack of alternatives also for pension funds and insurance companies. And for these guys, it's very interesting, on the other hand, to get a 4% coupon with a 65% leverage. So I'm pretty sure that we'll see these products more and more, but we haven't seen them in the last years.